So, looking at the economic calendar, per usual on Sundays, we always want to start off with the economic calendar just to get a forecast of high probability and low probability areas throughout the week. So, as you can see, Monday we have no news, so we can anticipate that to be low probability and lackluster. Tuesday, we have 8:30 a.m. news and PPI, so there will probably be something to do on Tuesday. Wednesday is CPI day, so if you are less experienced, stay away from Wednesday because it will be very, very, very high volatility, but it will offer clarity to the weekly range. Thursday, Thursday will probably be the best trading day out of the week. We have 8:30 news and 3 news events. Friday is likely to be lackluster. So we can anticipate either the high or low of the week to form on Tuesday or Wednesday. And now looking at the chart, we have the Nasdaq on the left and the S&P on the right. Now as you guys know, we have these lows highlighted and we've had these marked out since the very, very top. So we're about halfway to that target. There's nothing to really give insight on right now. We have to wait for the Monday range to form so we can get a more in-depth insight on what's likely to occur in this range of price action. But macro perspective for our way higher time frame, we can see these lows right here. And I would like to see the S&P hit them first. I'm not sure if Nasdaq will be able to reach down there, but the S&P reaching these lows is my main focus. And using the economic calendar, after the Monday range forms, if we form a gap right here, then I would like to see if a gap can form right here, and then we trade higher in that gap and then continue lower. So we need to wait for the Monday range to form before getting anything of use and getting more insight. But that is just the idea that I have framed out right now. But we have to wait. So now looking at DXY, still our macro perspective remains this high right here is where I want to see price draw towards. And yes, there will be retracements, there will be pullbacks on the way to that high. Uh-oh. I saw the little internet connection thing. Am I good? I should be good now. The Matrix attack. Don't worry, I will post this as soon as we get done. So that last 2 minutes where you guys didn't hear me, you can just go back and watch it. But like I was saying, this high right here is our draw on liquidity for the dollar. And yes, there will be pullbacks, there will be retracements on the way to that high, but you guys can keep in mind that anything long-term short for currencies, we don't really want to look for. Now, can there be a short for the weekly or daily range? At some point, yes. But way, way, way higher time frame, our focal point is this high right here. And now, looking at SMT and cycles. So I get asked frequently whenever I say something about a weekly SMT or a daily SMT. If I'm talking about a daily candle or a weekly candle, what am I talking about? So whenever I say a monthly SMT, I'm talking about SMT between weeks of the month. Now, why am I saying that between weeks of the month? Because the monthly cycle is comprised of 4 weeks. So 4 weeks in a month creates the monthly cycle. So whenever you have an SMT between 2 different weeks, that is considered a monthly SMT. Whenever I say weekly cycle SMT, I'm referring to SMT between days of the week, because the weekly cycle is comprised of days of the week. So it'd be SMT between 2 different days. Whenever I say daily cycle, SMT between sessions of the day, and the 90-minute cycle, SMT between 90-minute quarters. So that is some clarity because I get asked frequently on what do I mean whenever I say weekly SMT, what do I mean whenever I say daily SMT. This is exactly what I'm talking about right here. So does that make sense for everybody? And now for the newer people that were confused at first, after being told this knowledge right here, go back and watch the Timeframe Alignment video in the Back to Basics series. A lot of light bulbs will click. And as always, throughout the week, Monday and Tuesday, until Tuesday nights, price action lecture comes out, I will keep you guys updated within here, because that right now with the fair value gap is just the idea. Because price could just close out this gap and then invalidate the entire idea, and then we just have to wait longer. But right now, just practice patience and due diligence. This is not a high probability market. CPI will offer clarity. Yes. SMT between Thursday and Friday, or Friday and Monday, is considered sequential. If you go back and look at the non-farm payroll video that was most recently put out, in that video I told you the function of Friday. Could you go over how you would journal this week based off what you're seeing on the chart? So something I would write down would be, for example, week 2, January. I would put something along the lines of this. You guys are about to get some typing ASMR. Just something like this. This is probably what I would write down. Right now, price isn't tipping its hand that much, so I must wait and practice patience. I anticipate Monday to be low probability and lackluster, but Tuesday could offer some clarity to the lower time frame. Now, what do I mean whenever I say the lower time frame? I'm talking about the weekly cycle. I can see us going up to the 4-hour fair value gap. There's a bunch of liquidity resting at that gap. Since we broke below these lows already, I would not like to see us come fill this gap and then return lower. Since we broke below these lows, I believe the business up here has already been complete. So right now we just have to wait for a consolidation and then a form of manipulation and then distribution to where we want to see price lead to. But I could be wrong, and we could reverse, come fill this gap, and then take out these highs. We just have to wait and see what Monday does. When on NQ, the price retraces into a fair value gap, but there is no fair value gap at the same spot on ES. Is that considered an SMT fill? Yes, but it is a little bit more advanced because you have to look at the wicks and frame something off of the wicks instead of a gap. Since there's not two gaps on the same asset, or on between two assets, that same gap isn't there, so you have to use the wicks because wicks are gaps. And we will get into that, because everything you're seeing on the chart right now is a Kraken correlation, but you just have to know how to filter it. And that's exactly what I'm teaching you how to do. Do you sometimes trade a London session on indices? No. After a higher time frame SMT, can I replace the lower time frame SMT with another higher time frame intermarket SMT? So generally, you only want to have one higher time frame SMT between the triad you're trading, and then that second stage is whenever you can begin looking for intermarket SMT. But for high probability scenarios, you generally want that higher time frame SMT between the triad you're trading. Do you use the defining range? We haven't talked about that, but those that know about it, no, I personally do not. Do you ever try to catch non-farm payroll or CPI? I am the type of trader to wait till after the news release and then play off a continuation or reversal. Just due to the volatility in the spread, there's too much of a risk involved at the news release to get wicked out due to spread. There have been many times, unless you have a very, very, very large stop loss, because there have been many times in the past where I entered before CPI and was correct, but got wicked out. The advanced premium and discount sequence states that the weekly cycle corresponds to the daily candle range. I thought this meant that for a weekly cycle SMT, you would use the previous day's candle range to get premium discount. However, I saw that you responded to a question agreeing that for the weekly cycle SMT, you'd use the previous weekly candles range to get premium and discount. Can I please get some clarification on this? Yes. So with advanced premium and discount, all you're looking at, remember what I taught you guys right here. All you're looking at is the previous higher time frame quarter among your cycle. So what do I mean by that? Let's say, for example, what we have right here, this is our higher time frame. So let's say this is the weekly cycle right here. Or let's use your example. This is the monthly cycle right here. So these are 2 quarters in a month. So this is a week's worth of price action right here. So this is one weekly candle. Because as you guys already know, with what I just explained to you guys, wherever it is, monthly SMT between weeks of the month, because a quarter in the monthly cycle is comprised of 1 week. So knowing that, you would take that entire range and, wrong fib settings. You would take the entire range of that previous higher time frame quarter and then use that to navigate whatever lower time frame quarter or the sequential quarter or cycle you're trading. So you have your weekly candle range and then a daily SMT in discount of that previous weekly candle. So does that make sense? I had to try to make the video in a way that was easy to follow, because once you start adding quarterly theory and bringing in all the cycles and the quarters and all that, it tends to cause confusion. So I tried to put it in a sequence that was easy for everybody to understand. Will you teach weekly profile and daily profile, or do you not use it? You can find and map out your own weekly profile before the market even opens up, using strictly the economic calendar. And slowly, time after time, you guys will watch me do that once I bring out more concepts that correlate with that. Does the change in the state of delivery that forms after SMT and TPD for SMT skip have to be the next immediate candle after TPD? For example, the candle that wasn't impulsive. See, I get what you're saying. Yes, you do want candle number 3 to be the change in the state of delivery, because that shows strength. You don't want the TPD to form and then for it to be lackluster price action and then form the CSD. You want it to be immediate. That is the algorithmic signature right there. Day says that whenever you have an SMT within a higher time frame gap, there is no need for a second stage SMT. What do you think? We will get into that, because as you guys know in the past, I've said that for price to turn, you need 2 reasons. Do you ever use fractal PSP like the 1 minute? A 1 minute PSP? No. For SMT skip, can the TPD form before the SMT is established? Sometimes. Through backtesting and seeing it, you'll get a general idea of when it should or shouldn't be there. Internal range to external range liquidity, vice versa. Then we look for SMT and TPD to confirm our biases. Yes, you're catching on. You're catching on. How many of you? So I got a lot of questions asking about asking me to look at specific dates and then ask for my feedback and what I thought about it. Let's do a little quick survey real quick. How many of you, just from since week 1, we've only been here for 1 week, how many of you gained a better interpretation of price just from watching me call this fair value gap and then saying, depending on how it closes, we'll reverse back into these lows? How many of you gained a way better understanding by watching it in front of your eyes? Exactly. Now imagine week after week after week after week after week. Imagine where you'll be. And that's exactly what because that is true mentorship right there. Because anybody can go out and release a 5-minute video on quote unquote how to trade. But this by watching me, somebody that's experienced and knows how to actually maneuver these markets, when to do something, when not to do something, that's where you'll get the best learning experience. And of course, sometimes I'm going to get it wrong. Nobody's perfect. So don't expect me to be 100% throughout this entire thing. Don't want to get too cocky there. I understand that concept that day, depending on the candle closes, then confirming it with intermarket SMT. Yes. Do you use the defining range? No. Over this past week, you were wrong once. It's crazy. And even though, I mean, I technically wasn't even wrong. It just didn't deliver the way we, even whenever we're wrong, we're still right. Because yes, I did say I wanted to see price retrace into this fair value gap and then continue lower. It fell just short of it, which is fine. But even whenever we're quote unquote wrong, we're still correct, which it's hard to find a community like that. How do you feel if your mentor isn't trading live in front of you? He isn't a real mentor, or your opinion on that? So there are some rules with the CFTC. If somebody is paying you money and you do trade live in front of them, you have to, there are some rules that you need to abide by, which is a little bit tricky whenever it comes to legal action and things like that. But as long as somebody can call the market over and over and over again, I think that says enough. Why did you use monthly SMT on Forex to confirm that the bearish bias? Monthly SMT was the 4-hour time frame, and this was the daily time frame. So the moment that we hit a key level on the index futures market, that is the same time we formed a monthly SMT on the Forex market, which is important. The reason why I introduced intermarket SMT and all these crazy concepts to you guys early on is to get you guys thinking, because right now majority of you are confused, which is good. I set it up like that for a reason. Now we're going to begin the slow and steady, but first I had to kind of show you the tip of the iceberg, and now we're going to slowly and steady be following along, and also all the leakers are going to be confused. So all the concepts that may seem confusing now, I did that just to make you guys think. So you go back in your charts and you really, really dig. Are there times when you trade during sessions or days without red news folders? We will get into that, but yes. And there are even times whenever you can anticipate daily cycle SMT on what days of the week it'll form before the week even opens up. And some of you saw me do that on Telegram. Yes, we will be wrapping this up very, very shortly. So I'll answer a couple more and then we will head out. And I will keep you guys updated once Monday closes on what I think is going to happen. And then, of course, you guys are going to get the Tuesday price review. And then I'll speak with you all again on Wednesday. Yes, V Green, yes. You are on the right path. When we have an SMT skip and we have a skip in the daily cycle and look for 90-minute SMT in the next daily cycle, but we still see a daily cycle SMT, does that make it less probability? If it is a lackluster day, yes. If it's a day with red news folder, that makes it probably like 5 times more. That will make price very, very, very explosive. In TBD part 2, you say that if you want to anchor a premium and discount range for candle 2, you take the whole candle into consideration. But for candle 3 and 4, you only take the wick into consideration. Is this right? We will get into candle 4 later on because the rules change a little bit whenever you get to candle 4. But generally speaking, yes. When do you start one-on-one calls? We will more than likely, I'll say in February, the beginning of February. That should, because I'm not taking anybody else in until April. So February, March, that should be enough time to get everybody fit in that wants to get fit into a one-on-one call. And I set up one-on-ones before I knew I was going to be teaching in Day's group, which you guys are getting 10 times more value. Trust me. All they know from me is that literally all I told them was this low. Like that's all I pointed towards. They don't know a fraction of the things you guys know. But I will be a little bit busier dealing with that, but I will prioritize you guys still. So do not worry. How long did it take you, and what did you do to fix your psychology? Journaling. That journaling video that I put out, we're going to do another supplementary lecture on that, because there is some things you want to do psychological wise that you want to journal as well, not just price data itself, which will aid your psychology. But with that being said, I'm going to go ahead and close this one out. So have a good night, good morning, good evening, wherever you are. And I will speak with you all again on Wednesday, but you guys will get updated throughout the week. Good luck and good trading.